SOUN is dominating investor conversations as anticipation builds ahead of what many are calling a make or break Q4 earnings report, one that could define the company's narrative in 2026 and beyond. Traders and long-term holders alike are zeroing in on the company's management guidance around the path to profitability, operating margin trends, and whether recent enterprise wins are beginning to translate into scalable, high-margin recurring revenue. A major source of optimism centers on SOUN's, rather the company's expanding roster of strategic partnerships across restaurants, automotive, healthcare, and enterprise IT, amongst other things. On Friday, the 6th of February, it gained 17.96% on a volume of 31 million shares. Underlying trend is bullish, just bullish, yeah. Just, I would say, neutral to bullish, yeah. Okay, it's the 200-day moving average is gaining roughly 2 cents every day. Okay, roughly 2 cents every day. And the extrapolation of its 3-day moving average, seems to be suggesting that it might continue this uptrend, or rather this strength it picked up as of Friday the 6th of February is expected to remain in place at least up till the 20th of February. That is 10 straight session of gains. What are the odds of that happening? Not very high. And it's indicating that the resistance that the 40-day moving average is expected to pose is going to be dismantled, But in the interim between now and the 17th of February, the extrapolation is that the stock is going to trade within this tiny space. Then after that, it's indicating that it may just consolidate briefly and then attempt to retest maybe the high of around 11.72. Okay, let's see now. We have been able to digest the data on this daily chart further on Cloud. Okay, so the price pressure momentums tell us what the moving averages are doing, whether they're appreciating or depreciating. So as things stand right now, the 10-day moving average is losing $1.98 because the stock was declining before it bumped. Before the strength it showed on Friday, it was actually declining. It was on a downtrend, so that moving average is still dropping, even though the stock has looked up. Yeah. So all the other moving averages, apart from the 200-day moving average, everything is bearish. Yeah. So the inference is that all short intermediate term moving averages are in aggressive decline. The stock is trading below all major moving averages, indicating this bounce is occurring within a confirmed downtrend. Okay, the derivatives are showing accelerating bearish momentum for now. Yeah, so it is the downtrend. This bounce is occurred within a confirmed short and medium term trend. Yes, yeah. It's within a bearish short and medium-term trend. So market grid gives us a range of possible prices. Okay, so we have the daily and the 4-hour chart, because on the daily chart it has exceeded its market grid. Okay, then probabilities we have here are saying test of 8.71 on the daily chart. R1 is 65% immediate overhead resistance. Rejection at 8.41, 55%. Break above 8.87, 30%. Break down to 7.94, 40%. SXT is it's when it gets to that sort of level, then a buying opportunity may open up, begins to improve, but at the same time lower prices may still print. Aggressive auto-regressive forecast from conflicting signals. Okay, 40 period moving average still declining, that's why it has 10.44, and the 3-day moving average, which is faster. Okay, bearish intermediate term pressure. This divergence reflects the tension between long-term partnership potential and near-term execution risk. Fibonacci targets, only downside targets populated. Okay, 7.8 and then 7.07, no upside targets. Algorithm sees limited breakout probability. And then trade setup. This is just strictly instructional. It's not a recommendation at all. Okay. So entry will be 8.6 to 8.75. Pre-earnings gamble, fade the gap, mean reversion play. And then stop loss will be 9.7. So it's because this naturally, it's people are buying before the earnings. There's a chance that they may take money off when on that day or towards that day. So the 16% plus move is disconnected from moving average structure, with price pressure momentums deeply negative and price below all moving average. This resembles a dead cat bounce. The 4-hour grid suggests 8.41 to 8.71 consolidation before resolution. High volume, 31.46 million on the gap indicates a distribution opportunity for sellers. Probability of success 55 to 60%. Mean reversion is favored, but earnings wildcard exists. Long-term setup, accumulation on capitulation if fundamentals confirm a bullish scenario A, bullish earnings beat. Wait for pullback to 8.25 to 8.4. Okay. After initial spike, stop loss will be $7.8. Your target 9.94, 10.44, 12.43. Scenario B, earnings miss or neutral. Entry will be $7 to $7.2. Stop loss will be 6.5. Target 8.25, 9.94. Rationale: speech to meaning moat and partnership pipeline justify long-term positioning, but only at prices where downside is structurally limited. ppm 200 at 0.017 suggests the 200-day moving average stabilized, creating a potential floor. If management delivers a credible path to profitability, the stock could begin re-rating towards $10.44 forecast. Okay, so key risks and catalysts. Bear control until ppm 1 turns positive. Okay, and much more. Final verdict: this is a high-risk event-driven setup where technicals argue for caution. All moving averages are falling. No upside fib targets. Bearish price pressure momentums, but fundamental narrative offers asymmetric upside if execution delivers. The market has priced in hope. Now it needs proof. So the best play is wait for post-earnings volatility to settle, then reassess whether the price pressure momentum stabilize and price can reclaim moving average structure. The gap to $8.56 likely fills before any sustainable rally begins. Okay, so that's what's going on. Just see what you make of SoundHound, and thank you very much for watching this video.